Yo, what's up? What are capital gain taxes? So, capital gain taxes are taxes you pay on the profit, which is capital gain, from selling an asset like stocks, real estate, or cryptocurrency. When do you pay capital gain tax? You pay it only when you sell an asset for more than you paid for it. There are two types of capital gain taxes in the US. The first capital gain tax is short-term capital gains tax, which applies if you held the asset for 1 year or less. Then tax at your ordinary income tax rate, which will be 10% to 37%. The second is long-term capital gains tax, which applies if you held the asset for more than 1 year and tax at lower rates. The lower rates are 0%, 15%, or 20%, depending on your income level. Now, this is the 2024 U.S. long-term capital gains tax rates. And then for filing status, for the single filing status, for people who file a single, for the 0% rate, it will be up to $47,025. So if you're single and you make up to $47,025, then there's a chance you can get no capital gain tax, basically 0% rate. Now, if you're a single filer and if you make anywhere from the minimum of $47,026 to the maximum of $518,900, the 15% tax rate will apply to you. Now, if you're a single filer and you make over $518,900, then the 20% tax rate will apply to you. Now, if you're married filing jointly, the 0% tax rate will apply to you if you make from zero up to $94,050. Now, if you're married filing jointly, for the 15% tax rate, it will be anywhere, the minimum will be $94,051 to the maximum of $583,750. Now, married filing jointly for the 20% rate would be if y'all make $583,750 or more, then the 20% tax rate would apply. Now, here goes some special cases. Now, primary residence, you can exclude up to $250,000 on gain or $500,000 for married couples when selling your main home under certain conditions. Inherited assets, usually taxed at long-term rates, regardless of how long you or the deceased held them. Capital losses. If you lose money on an investment, you can use that capital loss to reduce your gains and even deduct up to $3,000 per year against your regular income in the U.S.